With an underperforming stock and a challenging market for Tesla, and basically all car companies, a firm reassurance may just be what most investors need to stay bullish on the car company, a reiteration of Tesla's potential and its capacity to be so much more in the future. Hey everyone, and welcome back to Everything Tesla Stock. In a recent interview with Tesla's CEO Elon Musk and longtime Tesla bull Ron Barron, Musk stated several reasons as to why Tesla may be on a path to becoming a very huge company in the future. According to Musk, Tesla is best at auto manufacturing and is leading the goal of autonomy. Ron Barron shared the same thought with Elon Musk, adding that Tesla may in the future be the world's best car maker, one that has not been seen before. Why will Tesla perform better in the future? Keep watching to find out. But before we get into it, don't forget to like and subscribe and turn on notifications to keep up to date on everything happening with Tesla. American fund manager and Tesla investor Ron Barron have once again reiterated his bullishness on Tesla. Barron is the CEO of Barron Capital Management, which is currently among Tesla's largest investors. In the interview, Musk confirmed that Tesla is looking to make a lower-priced car. Based on previous statements, this is likely going to be a China-designed 20 to 35K smaller EV vehicle. It would likely be a human-driven and robo-taxi platform. During the conference that followed the publication of Tesla's financial results for the third quarter of 2022, Musk also reiterated Tesla's plan to produce cheaper cars. After having completed the development of the Tesla Semi and the Cybertruck, Tesla has focused on the development of a new platform for the next generation of electric cars, which will reduce production costs and make electric cars cheaper. According to Musk, this new platform is going to serve as the basis for an electric car smaller than the Model 3 and also cheaper. The goal of the platform? To reduce the production costs by 50% as compared to a Model 3 or Model Y. This reduction also includes less need for labor and space within the factory facilities. The new car should be priced at around $30,000, which is way above the price of the Model 3, which is currently sitting at $55,000. Musk also stated that with this new platform, Tesla intends to manufacture a greater number of cars than all other Tesla vehicles together, and that's going to mean manufacturing more than 1 million EVs per year, and it's going to be its most affordable electric vehicle, although at the moment, there's no specific date marked for its production. Tesla has also lowered car prices in Shanghai. According to recent news, the starting price for the Model 3 sedan was reduced by 5% to 265,900 Chinese yen, which is about $36,615. Its Model Y sports utility vehicle also got a price cut. This price reduction in Tesla cars partially reverses some of the price increases the company was forced to carry out earlier this year in China and the US, owing to rising raw material costs. Musk has disclosed that Tesla is facing hard times due to higher inflation rates that had led to a hike in the price of raw materials needed to produce Tesla cars. While this has continued to be a huge problem for Tesla, the car company is trying to take control of its raw material supply. Tesla is also likely to earn massively from its FSD software. The company had officially raised the price of its FSD package to $15,000, just as Musk had promised. For years now, Musk has stated that Tesla would gradually keep increasing the price of its FSD package as functionality improves and leads to the actual final form of the product, which is the capacity to fully drive autonomously. Likewise, Musk also spoke about Tesla's Gigafactory autonomy, where he plans to build EVs that can drive for 50 to 60 hours instead of 10 to 12 a week. While increasing revenue, Tesla also is trying to costs. The company had disclosed that it had removed some parts and processes in its EVs to save costs. In October, Tesla announced that it's going to be replacing the USS with Tesla Vision and removing them from the Model 3 and Y vehicles. According to Tesla, with today's software, this approach gives autopilot high-definition spatial positioning, longer range visibility, and the ability to identify and differentiate between objects. The automaker also added that with its many features, its occupancy network will continue to improve rapidly over time. About Tesla growth potential, Musk stated that Tesla plans to hit a 50% growth rate in the future. In 2020, the car company stated that over a multi-year horizon, it expects to achieve 50% average annual growth in vehicle deliveries. It further stated that the rate of growth will depend on its equipment capacity, factory uptime, operational efficiency, and the capacity and stability of the supply chain. Alongside Musk, Tesla CFO Zachary Kirkhorn also indicated that the 50% growth target is a multi-year average, where some years will see faster growth than others. Tesla production and delivery tracker Troy Tesla has also concluded that Tesla is still likely to achieve its 50% growth target, and that the company is extremely unlikely to achieve its 50% delivery growth target. Tesla's deliveries have been rather unstable for a while, and the company is trying its best to work on logistics to deliver more cars. The automaker is trying to work on its supply of raw materials, and the rise of EVs has caused many car makers to become more involved in the mining industry to secure raw materials like cobalt, lithium, and nickel that are needed to manufacture batteries. Musk has previously stated that he prefers not to enter the mining industry, although Tesla will, if they have to, do so at some point. He stated that mining could become more of a constraint as Tesla increases vehicle production and scales the 4680 battery assembly line. At the Q3 2022 earnings call, Musk was asked about vertically integrating into mining, and he responded, "We'll do what we have to do. Whatever the limiting factor is, we'll do it. We do not artificially constrain ourselves. We don't vertically integrate just for the hell of vertically integrating." According to Musk, if there was a great supplier who's better than Tesla, or even where the economics of comparative advantages suggests that Tesla should use that supplier, it will, and then it will use its resources to do something else that will be more productive. Musk further explained that if Tesla has to go mine, then it will go mine. It was recently reported that Tesla had talks with Glencore about a stake in the Swiss mining agent. Glencore is one of the world's largest trading houses and a producer of cobalt in the Democratic Republic of Congo, Australia, and Canada. Some time ago, Tesla secured a cobalt offtake agreement with the mining company for Giga Shanghai and Giga Berlin. It seemed that Tesla and Glencore had some sort of discussion starting as early as last year, and the discussions continued until March this year when Glencore's chief executive, Gary Eagle, visited Tesla's Vermont factory. However, Musk has said in a recent investor conference that Tesla never contemplated investing in Glencore. It's not clear what led to that assumption that Tesla was considering investing in the company, but there may have been conversations between Tesla and Glencore as Tesla tries to secure mining materials. Likewise, Tesla has also confirmed its lithium refinery in Texas. According to the car company, it is moving forward with plans to build a lithium refinery in the Texas Gulf Coast, in a bid to gain more control over the supply chain of EV batteries. Musk confirmed this during Tesla's conference call while answering an analysis question on Tesla's progress in developing the company's new 4680 battery cell technology. Elon Musk described lithium prices as being rather expensive, adding that it has repeatedly encouraged entrepreneurs to start refining lithium as a way to ease supply chain bottlenecks of key materials used in lithium-ion batteries. And to solve Tesla's delivery problem, the car company uses autonomous trucks for delivery. Tesla is far ahead in terms of autonomy and will continue with this monopoly for the long term. Tesla also makes profitable EVs, unlike many of its competitors. A high share price may not be so necessary for Tesla. Rather, a low price may be preferable if the car company will be doing a share buyback. Speaking of a five-fold increase in the utility of Tesla cars, Musk stated that Tesla could build a self-driving car that costs the same to build but is 5 times as useful. If Tesla is successful with this, it could increase its revenue exponentially. But do you think it's possible for Tesla to do so? Let us know down below. And don't forget to tell us what your valuation of Tesla is. If you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.